the spotlight on UGRO Capital, and Mr. Shachindra Nath, MD and CEO of UGRO Capital, is joining us now. Shachindra ji, afternoon. Thank you so much for your time. Congratulations. There's a rating upgrade which has happened on your paper. Can you talk to us about how meaningful this is, and for an NBFC in general, when rating upgrades happen, especially from a reputed rating agency, how does it improve the business model?
Well, as you know, that we already have a rating from India Ratings, which is A stable. We were A minus from Crisil with a positive outlook. So now Crisil also have upgraded us to A. In the broader terms, given that we already enjoyed a rating of A, I don't think so it meaningfully changed anything. But two of the largest and most respected rating agency in a very difficult market environment for NBFC, and especially Crisil upgrading us, is a very big achievement and milestone. But unlike the public market and the reaction which you keep seeing on the capital market side, the lenders and the rating agency look at the fundamentals of the business, and they are not impacted by the noise around the market. So fundamentally, UGRO is now becoming India's largest, most dedicated data tech driven MSME financing company, and we keep saying MSME acha hai, which means the underlying MSME economy and especially the micro enterprises economy is becoming so robust, and this upgrade is a reflection of that. Other thing is that you should always remember that we divide the lending universe of the NBFC in two parts. Lenders which are supported by a very strong parentage, which have a large group backing them, where the rating agency and the both liability side take the comfort from the parentage itself. So if you have a large Indian conglomerate or a business house who has an NBFC, actually the underlying business performance is looked at much lesser. The parentage itself drives the rating, and that creates an artificial arbitrage. So if you're an entity which is rated AA plus or a AAA just because they have a strong parentage, we have to work much harder to get to the same level of rating, and we have to prove ourselves every day. And that we keep doing that. There is no complaint about it. But we are, the difference between what I call a capital owner driven business versus an institutional platform, we are every passing day nearing to be treated at par with some of the largest NBFCs in India.
Right. Fair point. But there is also a conscious kind of a move, a strategic move, which I am observing last few months from your company, from the company which you represent, in order to, kind of diversify the borrowing mix very nicely. Can you talk to us about that part of the conscious strategy, and how's your borrowing cost right now overall after you've done some recent fundraisers as well?
So sometimes, Ajay, actually, the compulsion becomes the beauty of the business, or the constraint actually drives a strategy which play out very beneficial in long term. Given we started as an independent company, wherein 100% of our ownership was institutional in form of PE and long-only investors, we didn't have the backing of a parentage. We knew that we cannot have 1, 2, or 5 large banks lending to us. So by design from day one, we created a diversified lending strategy or borrowing strategy. That is the reason why we became India's largest co-lending partner NBFC for banks. So almost 45% of our book is off balance sheet, which put lesser strain on our liability on balance sheet. We have 60 plus total lenders on our balance sheet, and almost every bank in India and every large DFI globally have now lines to us. And it is no small feat to achieve in a period of 4 years. When large institutions like FMO, ADB, investors like IFU give money to us, it actually is a culmination of almost 3 years of effort. When large public sector bank and private sector banks give us continuous line and they are scaling up, that's a very hard work. But for us, when the RBI is saying that the dependence of NBFC on bank borrowing should be reduced, we already have very less bank borrowing. So, almost 35% of our borrowings is from banks and rest is diversified. So actually, we are benefiting at this point of time from the constraint from which we started and which forced us to build this diversified liability strategy of off-balance sheet and on-balance sheet is playing out extremely well for us.
Right. Before I let you go, I also want to talk about this new social impact research report which you have conducted with the other industry majors, which actually dissects how the borrowing mix is actually changing and how it is getting, how people are availing credit now, what are they using it for, average age of borrowing, how that is transforming, and also women borrowers. Can you give us a gist of the recently unveiled report?
So there are two things which we were actually seeing this, that mainline domestic lending institutions, especially the banks, they have this notion that MSME borrowers are very weak borrowers. And this is stemmed from the fact that they have seen very bad portfolio over last decade or so. So that's why along with DNB now we would be publishing a report every 6 months, which actually tells the health of micro enterprise borrower. And that has been done basis our customer base and as well as the industry report which DNB actually accumulated. What we have been able to demonstrate that a sample of 25,000 plus customer, every time they are availing credit facility from us, the health of their business is growing. The industry only looks at the loan data portfolio, but we are demonstrating the health of these businesses improving year on year basis. So that's a very good sign. I keep saying that the what you have seen in consumer financing business is what you will see in this decade in MSME financing business. Second, we also publish what we call an impact report. Is that for an entity which has roughly around 8,500 crore of lending to all 1 lakh plus customers, what kind of impact we have been able to create? So whether it is in form of new employment, women borrowers, new entrepreneurs which are generating MSME businesses, or overall economic output which is getting created. So 9 SDG goal we cover, and on every account we are seeing massive impact being created. So our plea to most of the mainline lending institution is that both from economic front and health of the business and as well as what you can create as an impact in our country, MSME financing is in a very good place. We recently launched a program on Women's Day for female borrowers, because we are seeing that the incremental quality of credit and now this trend of women actually coming up and trying to set up a small business is now all pervasive. It is, we have never seen in my life in tier 2, tier 3, tier 4 towns, small businesses are run by female entrepreneurs who may not be as bright or they are bright, but as may not be as visible as what you see in some of the large startup. But at every strata of the society, we are seeing that the level of equality is getting improved with every passing day. And if the lending institution actually create more programs for them, I think so our country would be in a very good place in coming years.
Excellent. Great chatting. Thank you so much for your time, I'm sure. And your institution building is also in the same direction. So we are in for some great time for the country going forward.